Hi guys, I hope you're well. So I want to draw your attention to something real quick, and it's basically the collapse of Ethereum. And I know obviously this isn't the death of Ethereum, but this was a really good short play. And I usually don't trade cryptos, and everything I know on cryptos is based on what I hear from Siam Kid. So Siam Kid had basically said on the 8th there's some fundamental play that's going to go on, and basically we all know that fundamentals do cause volatility. So when I trade fundamentals, I don't trade them on the day. I usually like to trade them a few days, maybe 2-3 days before, and let fundamentals play out. The reason why I do that, and you may notice this, fundamentals give you a false sense of direction. And what I mean by that is this: when the fundamentals started playing out, I'm not sure what the event was or what the news was. What you'll find is like a huge spike up, and that doesn't mean that this is an uptrend. What it means is just that that's the impact of the news, but the general direction of the trend is a downtrend. So if you had traded this like me on last week Friday, is that this was a double top and it was falling, right? So when fundamentals hit, yes, there was a big spike, but then price quickly crashed down. Within seconds it crashed down. So it moved in the few minutes up, but then it crashed down. And it's always best to focus on the general direction of the trend and not on a slight movement, which is why I dislike fundamentals, is that it gives you a false sense of direction. It gives you only a short-term direction. Now if you want to be a scalper, you want to trade short pips, small pips, that's fine, you can do fundamentals. And another reason why I'm not also heavy on the fundamentals is that by the time you guys hear news, it's already old news. And by that I mean this: so currently with my job right now as a consultant, most of what I do is basically find out what filings have gone on into court, and we give that information to private equity people. So you can imagine by the time you guys hear the news, it's already done and dusted. So this is just an example. I can't show you clients' information, but this is an example of the things we do, like bankruptcy, dissolutions when companies are going bankrupt, facility closings, mass layoffs. So like when Amazon or Twitter or Facebook is doing a mass layoff in different states in the United States, we basically immediately tell private equity clients. So what I mean by that is basically by the time you hear the news, it's already old news, and that's the whole point. And so there's no point in trying to chase fundamentals. You'll be fine without them. You'll be actually better off without them, because trying to trade fundamentals is trying to guess what's going to happen. You hear these fundamentals and you're trying to understand what impact that's going to have. Whereas if you stick to your strategy and you stick to your patterns, you know price is going down, and that's the route you're going to take. If you lose, it's 1%, you're not going to die. So that's the whole point, which is that fundamentals it's not the hill to die on. Like, you really aren't missing anything. And I think the problem is that on social media, you'll usually see people showing them trading fundamentals and then them making immediate money quickly. Don't fall for the hype. It's really not that bad. It's really not that serious. Sorry. So here's what happened. This was the first leg, right? Price came down. Second leg. So obviously, clearly you can see this is what double top, or I don't know if you call it an M pattern, you can do that as well. And then now it's just a matter of measuring to see where our take profit is. So here we go. There we go. So we've measured the leg, right? And that's from basically this head to the neckline. And now we're assuming that price is going to continue to go down. I say assuming because we never actually really know. Yeah, I can't get any lower than this at the moment. So basically, I'm just assuming the price is going to continue going down on this trade. And if we zoom in to see how I pyramided this, I first placed my first trade here was on Friday. Monday morning, price came down a bit, shoved down a bit, and then here's when I placed the second trade. Placed the second trade here because I thought this was just a short pullback. Price pulled back, and it was about to go down. And so I placed this trade here as it was going down. Fundamentals came out, price shot up for a few seconds. This is why I usually wait to put my stop losses in terms of pyramided trades, because had I just done what I usually do, which is just put a stop loss here and then just leave the rest without stop losses, which is what I usually do, what happens is that price will shoot up, and if you have your stop loss here, you would have been stopped out. If you had just stop loss here, you would have been shot out. So I hope this shed some light on how to apply your patterns and keep things simple. You don't need tons of indicators, you don't need tons of anything. You just need to keep it simple, and pyramid. So add to your winning trades, cut your losing trades short, and that's basically all there is to it. Thanks, guys.